So the big question is this: how do investors like us who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings in retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. They were using the science and the research and development behind what they did to skyrocket the quality of the products they were bringing into the marketplace. So at a fundamental level, they were growing as a company by providing more value to the marketplace, by out-servicing consumers and clients better than their competitors were, right? So at a fundamental level, if you do a better job than the other people like NVIDIA in the space, you should grow. And I think in the year that I was looking at them, I didn't know this beforehand, but looking back, they basically tripled their consumer SKU market share in a matter of months. So you look at the stock price and it kind of reflects that. They tripled, took a little bit longer, longer from the initial change in market sentiments. But all of a sudden, you can look at the research that you're doing about companies, and that research has tangible results in the marketplace. And instead of just being like a fun trivia fact, all of a sudden, you can use this information that you know or that you've experienced, or maybe you're working around it. Like if you're working, a lot of friends, they work in the medical space. They know a lot about medical stocks, and they understand what's happening when a new company releases something. Well, they can use that knowledge and they can use that background to make plays in the market. So, for instance, these guys have an amazing new product, and maybe in their annual report they write a little bit about it, but you're not going to tell or know this without some huge news report. It's going to radically change public perception. So by using some background information that you just have based on your work or just luck, really, you can make these investments in the economy and in individual companies that are definitely riskier. But at the same time, what you're really doing is turning that knowledge and turning it into money, right? You learn stuff, you apply it, and all of a sudden you're making money just by having these investments. And the greatest thing is, it's not, the government doesn't qualify it as earned income. It's unearned income, because you're not really working for it unless you get to active trading status. But in most terms, you're just consuming or going through a day, and then you realize you're watching the news or whatever it is that you do, or maybe you're just researching on your own, which is totally cool. I love it. You spend an hour a week researching, you're going to outperform. If you maybe spend an hour a week researching stocks based on a quality underlying education, you're going to outperform a lot of people in the marketplace. If you just make a trade a month, and that trade a month nets you an average of 10% a month, you put 30 portfolio, and it just depends, right? But you're going to beat a lot of these indices. You're going to have outperforming market returns solely because you put in the work to understand what you're investing in, and then you made the right investments that went out in the marketplace and crushed it. You bring direct value without a boss, without an office. It just happens, and you just do it, which is awesome. But anyway, so I was doing all this research. I was coming to all these amazing understandings and euphoric realizations about the amazing magic of stocks and how they are a way to generate income while you're doing other things. You don't have to focus. It's not like, oh, my job is a stockbroker. No, right? You just spend a little bit of time. Then you make investments, and those investments, you don't even have to spend time. If you just invest in diversified funds, you're done. And that investment, at a certain point, once it grows fast enough, is literally going to earn more money than you earn at a normal job, right? If you put away, 10 grand a year for 10 years, $500,000, that's obviously going to grow over time, right? So maybe if it compounds at an average market return rate, you could see, you have $1 million in your portfolio. Now, all of a sudden, you make the average, 10% stock market return, given inflation, but that's $100,000, $100,000 a year, just in average annual net returns. And you don't have to do, anything to get that, right? It's just the average return. And now all of a sudden you're making, like a doctor's salary, or starting, or an engineer's, whatever salary you want to compare it to. Like, that's just money that comes out of passive investments in the American economy. And the way you get that is just by understanding the game and then playing the game. And now you get to a point where, like the 4% rule, right? Average annual returns around 10%, 9% for the S&P. Conservative numbers for long-term growth. All right? If you look at inflation, it's about 2%, so that's a 7% return, conservative, in the long term. If you take out 4% of your portfolio, in the long term, you shouldn't really decrease the actual value of your portfolio. It should still continue to go up and down and vary based on the individual days and the individual market conditions. That's a given. You're going to have volatility, but you should stay about the same, maybe a little bit of long-term growth, maybe that 3%, which is the difference between the two numbers. If you just have it in conservative funds, that 3% is just going to keep growing. So you take out 4%. If you take out 4% of your portfolio and live on it, well, I'll tell you what, you can retire, dude. You like 4%. If you live on, I don't know, it's $50,000 a year. What do you need to get 4% to have $50,000 a year? So, a quarter, maybe say $40,000 a year, just for easier math, because I'm a little bit tired here today. $40,000, a quarter of that, which would be 1%, is $10,000. So you would need 100 $10,000, or 10 $100,000, or $1 million. If you have $1 million portfolio, I mean, there you go. That's $40,000 a year on the 4% rule. And now that you've put in the work and you've saved the money, and it might sound tough. How do you get to $1 million portfolio? It's not that tough. It's just about consistency and understanding the rules of the market. And once you do that, you're going to be on your way. I don't have a calculator on me at the time, but you look up compound interest calculator and you put in, average annual U.S. household income, $50,000, something like that, $55,000, who knows. Put away, 10% of your income. I'm going to go 20%. I think I can push you to 20%. You can find the budget. I believe in you. You guys are smart. Put away $10,000 a year for 20 years? And that's just off average numbers. I know you guys aren't average. You can produce more than that. You can bring more value. You can increase your income. Whatever it is you do. If you can get to a point where, let's say you have $100,000 in the market, right? 10% of that's $10,000. Okay, next year you add $10,000, that's $120,000. 10% that's $120 or $12,000, right? $12,000, you got $134,000. Now you add another $10,000. There you go. You're $150,000. And it starts out slow at the beginning, right? It starts out slow at the beginning, especially when you're starting at zero. It starts out slow, but you got to understand that the compounding growth rate, right? So it's like a curve. It's a geometric curve. So at the early stages, you're growing slowly. It's about what you put in. But once you get, to that 400,000 mark, or that 500,000 mark, or add a zero to it, whatever it is for you, whatever your savings goals are. Do you want to be a millionaire? Do you want to be a decamillionaire? What do you want to do, right? You only live off $400,000 a year. That's $10 million, right? You can live off $400,000 a year. All you have to do is put the work in to grow your portfolio at the beginning, right? So anyway, once you get to those higher levels with whatever it is respecting what you do, maybe say you put in $10,000, but your portfolio is at $40,000, so you're going to net an average, $40,000 or $400,000, $40,000, 10% return per year. So now the money that you get purely off the interest on the money from your historic investments, the money that comes from the money that you already put in, the money that's been generated from the money you put in, is actually going to be, quadruple your actual income for the same time period. So instead of now working and slaving away for your portfolio, Your portfolio has you've put the work in, you've let it grow, and since you've let it grow, you're going to be able to start to let it pay you back, which is awesome. And the important thing is to keep allowing it to reinvest, so that at the end of the day, right, your money is making you more money than you can make on your own. Because that's the power of capital markets, right? There is an abundance of wealth in these markets, trillions and trillions and trillions of dollars. And you can get your piece of that through long-term compounding growth, right? Your money might start out small, but the power of that is so large because you're able to grow it and grow it and grow it. And maybe instead of buying that $200 pair of shoes, if you wait 10 years, 20 years, all of a sudden, instead of being able to buy one pair of shoes, the growth of assets in your portfolio lets you buy, 20, 30,000, 20 or 30 pairs of shoes, right? So that one pair multiplies and multiplies. Your money does the same thing. It multiplies and multiplies. It's like, multiplier mindset, right? Whatever it is that gets you on track with it. But the point is you're able to grow and grow and grow with the same amount of work every year. Even if you don't go out and trade stocks every day, you don't have to. You can literally do nothing, except buy an index. And all of a sudden, at the end of your savings period or the end of retirement period, you're actually creating this amazing asset that is your portfolio. And that's going to pay you for the rest of your life. It's going to pay your kids, it's going to pay your family, it's going to pay everyone you know. Because you have so much, you've made such a big snowball, right? It takes a long time to start the snowball. And it's hard at the beginning because you're starting with nothing, right? So you have to build your little snowball on your hands. And after you build the snowball on your hands, you got to add some snow, you got to scoop up snow. And it's a lot of work at the beginning. But then what happens is really interesting. You can start to roll your snowball. And now you're working to put in snow, but at the same time, the snow that you've already collected is actually sticking to more snow for you as you roll the snowball. So instead of it just being you working, it's now your snowball working for you. It's now your portfolio working for you. So at this point, now something really, really amazing happens, because it's definitely mostly you at the beginning, just like with a snowball. But once you get it to, a hip-sized snowball, a mid-sized snowball, it's got the weight and it's got the value in the marketplace to start rolling down a hill. And that's what I want to show you guys, because the American economy is like that hill on steroids. It's like taking your snowball and dropping it off of a cliff, except as it goes down, it's just attacked by an insanely thick blizzard. And that blizzard grows and grows and grows. It's like the steepest hill physically available in the financial marketplace. And that hill is going to provide you the most possible speed to get to your financial returns and the most possible growth given your initial position in the marketplace. Because once it starts to roll down that super, super, super steep hill, all of a sudden there's no stopping it, right? If you had money problems at the beginning, if you had snow problems at the beginning, right? You didn't have enough snow, I couldn't make the bills, my snow bills, right? Or cash, right? You didn't have the value. But now that it's rolling down the hill, like, you can't catch that snowball. It's going too fast. It's running away from you. You know why? It's because the insane power of the U.S. stock market is giving you this insane return that is essentially, unavailable anywhere else in any other markets in long-term capital growth. And that long-term capital growth, just like that snowball rolling down the hill, right? It just keeps growing and growing and growing. And then it gets out of control. And something really, really interesting happens is you can't help but start to amass wealth. You can't help but start to feel rich, because all of a sudden, once that snowball gets far enough down the hill that never ends in the American economy, the hill that goes on and on and on. It goes on and on because it's a proven historic economic financial system that has ups and downs, right? There are bumps in the hill. There are uptrends that you might have to push your snowball over if it gets stuck. And there are holes that it can sink in. But in the long term, it's going to pop out of those holes. It's going to pop out of those divots in the hill. And those divots in the hill are going to blow away in the long term. And as the snow keeps falling down, it's going to create this amazing layer of financial security. This amazing layer of snow that's just going to keep growing and growing and growing. And as the layers grow, as the markets grow, as the underlying fundamental companies that make up your portfolio grow, suddenly you have this amazing ability where your snowball is going to grow so quickly that you literally have trouble taking the snow off the top. You have difficulty spending more money than you make in your portfolio. Now, tell me that's not an amazing position to be in. A position you can be in where instead of thinking about all the work you can do for your snowball, all the work you can do for your portfolio, now you're thinking about all the work your snowball, all the work that your huge portfolio does for you. And now you're at a point where you can make thousands of dollars in a day with trades, or you just let it sit passive in the marketplace and you make a full-time income with that long-term, dividend, appreciation, whatever it is, 4% rule. You get a 3% dividend or 3% bond yield on a multi-million-dollar portfolio that you spend your life building. And now, all of a sudden, your snowball might be on a different hill, but it's so big that, it doesn't matter. It's like, what are your goals? And then take your goals and make them a reality. It's insane. Let me keep going here, because I want you guys to understand the crazy power of these long-term capital markets that are literally forging futures, making millionaires every single day. People retire every single day. Someone turns 66. And what I hate is that not every one of those people are millionaires. Not every one of those, and maybe it's not millionaires, right? Maybe they have different financial goals, but not every one of those people are meeting their retirement goals. Why is that? Well, I'll tell you what, I think there's two big reasons. And the biggest reason I'm tackling right now and working towards right now to getting over is that educational barrier to entry into finance. Like I said, let me go back to where we were. Working at Subway, towards the end of it, right? It's about Christmas time. I'd been working since the beginning of summer, since school got out, and then just kept going hard, right? My snowball, I was working, but it was like I was trading time for money, and that time for money was building my snowball. That time for money was building my cash basis. At the time, I didn't know about this amazing hill that I could roll my snowball down. I didn't know that there was this thing called the stock market, and the stock market was just right over that railing, right over that snowy railing. And I could take what I had and put it and throw it over the railing, and all of a sudden it would start to grow, and it would start to grow. And, that year it was about 25% in the stock market. So I could take my minimum wage, $7.50, 10% of that, 75 cents, another, $1.50, so $7.50, $8.50. I could have given myself a $9, and it's like nominal, right, when you're looking at minimum wage, but it's like you're literally giving yourself a raise every time you put your investments in assets, because the historic cash that you had, that's suddenly multiplying, right? That's turning into more and more because of the time that's behind it, that time that lets it roll down the hill, the time that gives you the ability to finally have it grow. And it's so ridiculously powerful what that can do in the long term for you. Anyway, so like I said, I didn't throw my snowball over the hill because I didn't know there was a hill. So that's why I want to get to you guys in this Stock Market Secrets podcast, is that there's this amazing place where you literally just put assets in the economy. And when you do that, when you make that investment of yourself, of your time, of your energy, of your capital, that's what allows you to create that financial security, that safety net, that retirement goal, retirement plan, savings fund, whatever it is you want to do. Those are all just snowballs on the hill. And you can throw 5, 6, 7 snowballs on the hill if you have things you want to get done. And you just keep putting those snowballs down, and they're going to grow. As they roll down that hill, they're going to grow and grow and grow and grow. And if you think about it from the percent return standpoint, the more money that you're going to make, it depends, right, on those percent returns. So if you start running down that hill and pushing that snowball as fast as you possibly can. If you start running down the hill and pushing the snowball, an extra 20 miles an hour, if you're constantly pushing and pushing and pushing, that thing's gonna grow faster. That's active management, right? That's an active pursuit of outperforming returns that are gonna grow your investment portfolio at a faster rate. Now, you don't have to do that, right? Remember, there are people, and all they do is throw their snowball over the hill, and suddenly their portfolio grows just thanks to the massive power of the hill that they're on, which is the American economy. But then you look at the people who are trading 9 to noon, the people that are putting in the work to grow and take that growth to such an unsurmountable higher level. And that higher level is what's going to get you to the whole different sphere, whole different atmosphere, whole different level. Not necessarily like financial level, but like this commitment of, I'm going to run down the hill because I care about the hill. I'm going to drop what I was doing at the top of the hill. You know, me, I was working at Subway. After months and months and months of researching and learning and trying to figure out all these secrets that I just never heard of or had any experience with, or any solid mentor or teacher. And I went to a school where I had to take all these core classes, and there was no interesting elective for me to take in investing or finance. The only class that was even close to what I was doing was this math class that I couldn't take. I was in like calculus, right? And they have like the class that they put the kids who just take the easier math classes in, and those were the classes where they were learning, what a bank account is, or what an asset is, or what compound interest is. Like, I didn't have that. And even if I did have that, those don't go into the depth that I think isn't really that technical, isn't really that complex. Once you understand like what the S&P 500 is, once you understand these long-term indices, once you get to that next level of, here is how to go from 0 to 100 to mastery your personal finance and investments. That just wasn't an option for me. I know some schools, they have classes like that, which is awesome. I didn't have that. That's why I started teaching them. After a couple years of trading and investing, kids started to see what I was doing. They were all on the same track. And so I started to put the work in. And after school, for half an hour, I'd just lecture about stocks, teach people about the stock market. Be like, hey guys, this is the stuff I'm doing right now to make a lot of money. I would recommend copying it. And then people did. And then people started making bank. And that was awesome. That was really cool. But anyway, back to Subway. So, I put all this work in. It was months and months of research. And I decided at one point that, this is what I want to do. I'm going to go all in on this, because I'll tell you what, guys, you can't dabble with a new career, a new passion, a new hobby if you're trailblazing it, right? If you're going to a level that, historically just wasn't an option for a lot of people, that's not something that you can just play around with. You have to commit. So I walk in, and it was a Friday. Pick up my paycheck and leave a letter, and it says, hey, it's been a great time. I was really, really thankful for everything I learned, but I got out of there, man. I put the letter down, 2 weeks notice, I was out. And that was the day I walked out a full-time investor, full-time stock trader. I jumped over that railing, got onto the hill that I found, and started running down that hill with my snowball as fast as I could, and started pushing that snowball down as fast as I could. Instant I got home, I was trading stocks. You know why? Because if you're on the hill, sometimes you have a smaller snowball to start out with, and it's tough to grow it. But if you look at the immeasurable power of doubling your portfolio, if you look at that compounded over time, and that's something that's so within reach for so many people, if they just learn, hey, here are the strategies, this is exactly how you could double your portfolio in just a couple of years, with very minimal work outside of whatever you do. With day trading, it's even crazier. With 9 to noon investing, literally 10% a day is just normal. And that compound growth is insane. It's ridiculous. It's so great. And I just am so passionate about that aspect of investing, because it's amazing what you can do with it. And It's just crazy. So anyway, I go and I just start investing after school. Every single day it was investing. And I was like, I had to make it work, dude, because I literally quit my job so I could have the time to go hard every day and push that snowball and invest and trade and grow. And dude, it was tough because like I didn't have any experience, right? I quit, and that was when I was finally able to open, my first brokerage account and have my first stock. Because before that, it was all research. It was all these fake stocks with paper trading. It was all this stuff that just wasn't actually creating results in the marketplace. So, you start making your first investments, and that's when I started to get into think about, the companies I'd heard about in the computer space and in tech, which is my background, with computers and blockchain and the work. I talk about that. I'll talk about it other times. It's just not the thing to talk about now, but I had a huge background in technology. I loved it. And so I used that as fuel for my investing because those were the companies I knew about. So I started getting in, AMD, NVIDIA. Turns out to be one of the craziest years for tech in centuries, which was awesome, right? Because now I understand the crazy growth that's possible with the market, but at the same time, I made a bunch of mistakes, right? I had these colossal failures at the beginning because I hadn't actually mastered those patterns and that analysis that I've been working very, very hard on and doing a great job with. But at the same time, you really do have to, like I said, there were hundreds of these patterns, and some of the information I got wasn't even right. It was bad information. So because it was bad information, that is what kind of got me to that point where all of a sudden I was figuring out what worked and figuring out what didn't work, and I was figuring out real quickly because I didn't know a lot about diversification at the time. I didn't really research it. I was putting down $1,000 positions in my $5,000 portfolio. It was like 20% of my portfolio on stuff I just really didn't know about. So these were like swing trades, long-term picks, and oh my God, it was bad diversification. But you learn so much about the marketplace at the same time. And suddenly, I'm like, whoa, this pattern didn't work. It lost me a lot of money. And I think I talk about it in the other episode, the single stock market secrets episode we have so far. Maybe I don't know. Just depends. We're working on this real hard for you guys. So, I buy these stocks, and some of them do really well. NVIDIA does really well. AMD does really well in the long term, but not at the moment. Not at the moment. I lost a lot at the beginning because, I didn't have that education going into it. I didn't know what the heck I was doing. So, you lose a couple $100, $1,000 in the market. You pay your market tuition to learn what you're doing because there wasn't like some magical, $30 book I could read. They would give me everything I needed and take me to a point where I could actually start profitable. Let's see, which way do I go here? I think I go left. So anyway, some of my first trades were great. Some of them were just a little bit crazy. And then something really interesting happened. I'm continuing to swing trade, and after a couple of trades, I started to realize a little bit more about the importance of volume and legitimate marketplace, volatility and growth as a prospective investor, which are a lot of the really great principles I distilled down, in the book. But you get that experience under your belt. And because I was able to put that time in, that was when I really started to grow and get a whole nother level of, I was finally turning that knowledge into action and turn that action into wisdom, because I really was able to understand exactly what I was doing and exactly why it worked and why it didn't work based on the trades I was making in the marketplace. So I do that for a couple months. It was like 2 months. Maybe it was like a month, honestly, I don't remember. It was really close to the end of the school year. And that was the end of sophomore year. So I decided junior year, I talk about health a lot on YouTube or wherever, but a really important thing that got me to where I was at that point was health and working out and exercising like every day. It's freshman year, before I even got in the Subway, I essentially lost like 50 pounds, and that really kind of changed my life over the course of 6 months because, it gave me the confidence to start growing in a direction that was just completely cut off to me before, because I didn't have the confidence in myself, my body, where I was going. It just wasn't even an option for me to start growing and developing myself until I had that sense of fitness, until I had that sense of control over my body, which before I didn't have, because to be perfectly honest, I don't know if people can control their financial portfolios if they can't control themselves. And I don't know, I haven't had a whole lot of experience in this space, but I think it really, really helps to have control over your body and control over yourself when you're going into at least these high pressure stock trades where you really have to be present and on the dot, especially with 9 to noon trading, take it to that next level of financial gain. Like, you've got to be ready to crush it. Not necessarily, with long-term investing with indices, but if you're looking for those outperforming returns, if you're looking to jump over the hill, jump over the fence, run down the hill, push that snowball. You got to be fit to push the snowball, right? Or you'll, topple down the hill. Like, that's how I used to be. And it was really bad, but I got on the grind. And I found programs, just diet and exercise. Cut sugar from my diet, didn't eat it for a year. And that changed my life. Changed my body, changed my health. Probably extended my lifespan by so many years. Gave me the time to enjoy the money that I create, which is so valuable. People say like, oh, you're working out and that's going to, how many years of your life do you spend working out to gain those years at the end? Don't listen to that. Those are average people, okay? Those aren't the people that are going to live to be 150. Those are the people that are going to have heart attacks. Heart attack, leading thing that kills people. It sucks. And it sucks because people don't have that control over their bodies. And that's not what I want for you, because I want you to have total life success. And the way to do that is through financial markets, but also just, diet, exercise, control your life, and, work out every day, at least. Anyway, so because of that, I was starting cross country, right? So summer starts, and I'm so excited to start trading 9 to noon, because that's where the real money's at. Is making those active trades every day and getting on that hill and just sprinting as fast as possible every single day to get the highest performing marketplace return, so that I can push that snowball at speed so it's like people can't even calculate. It's so big compared to these average historic market returns. It's just so insanely bad. It's just such a greater performance. You're literally getting an entire index return in a single day, and that's so powerful. You have like 250 of those. 200, it's like 250 years of investments, and obviously you're not going to get it every time, just like the market's not going to get it every time. But you take it to that next level, and anyway, 9 to noon trading is just insane. I love it. So I'm like definitely trading 9 to noon over the summer, because that's what I'd love to do. And at the time, I didn't really realize I wasn't that deep. I wasn't like this huge stock market guy, but I did see the potential. And I saw the stocks in the middle of second period, in the middle of third period of school that were going out there and doubling overnight, or doubling in the morning, or tripling, and those were the positions that I knew were the key to that financial future and that independence and that success that I wanted so badly. Because, at the time, I just felt really bad. I was living alone with my mom and my brother, and my dad left. Right? It was just, I was on my own, and I was like the guy of the house, I guess, but like to a grander sense, I had this urge of responsibility to provide and create and also to grow to a point of independence and take it to that next individual level where I could support myself and those around me and grow to a point where, my mom was working, morning to night every single day, and it freaking sucked because she don't have that time, and it's like this constraint of capital in an economy where employees like she was working to her maximum for an employer, and it's like, dude, that sucks. That really sucks, because she's just getting, I don't know, it's just being an employee in that position was it's just not a good thing to do for most people. I don't know, that I know. Just kind of sucks, because it's where I used to be at Subway. I knew it wasn't where the future was for what we were doing. And I needed to find a scalable way to create consistent high income value. And the 9 to noon trading, like the stock market was the answer for that. So anyway, summer starts, and I sign up for sign up for cross country, right? To do cross country the next year, first year cross country. You know, I'd done weightlifting for the entire year previous, and really gotten into just like the best shape of my life, 6 packs. I mean, it was amazing. It was such a huge transformation from being the fattest kid in school. It was crazy. It was crazy. And then, you know, my friends are on cross country. They were like, hey, you should do cross country. I was like, you know what? That sounds freaking cool. I'm going to do it. I talk about that a lot, but the point with it is to just take opportunities as they come. It was probably one of the best things I've done. It was such an amazing experience. People, running, the massive change in my aerobic ability, insane growth of my, you know, lungs and oxygen capacity, which is one of the leading indicators of life. Like, if you can hold more oxygen in your lungs, that's, I'm pretty sure, the leading indicator of living a longer life. And the way to do that is to literally just run every single day for like 2 years. You know, miles and miles and miles, and it was amazing. But the thing with it was, practice was in the morning, which is totally cool. Like, I'm a morning person, you guys know that. Wake up at 4 every day. You know why? Because I'm here for you. But with that, the practice ended at 9:35. And for those of you who know the stock market secrets, 9:35 is 5 minutes after the opening bell. And practice can't end at 9:35 if I'm going to be home trading the opening bell, which is the time period to get the highest possible returns in the stock market in any financial class by going out there and absolutely crushing it. So because of that, I start to run it myself, right? So I gotta make my breakfast and then just run by myself in the morning, which sort of sucked. But you got to overcome those fears, and that trouble at the beginning isn't something that you can just, you know, glance around. You've got to attack it hard, and that's just what I did, right? So instead of, you know, cheaping out or saying, oh, I'm not going to trade stocks, like I knew stocks were the way. That was what I had to do. That was the thing I needed most in my life at the time. So I worked out in the morning, ran, you know, miles, and then I would get done, you know, 8:30. Or maybe it was earlier than that. I don't remember. It was a long time ago. Definitely before the market opened. Definitely before 9 o'clock. Probably before 8:30. I don't know. It was a while ago. But so I'd get that work in to get, you know, I'd make the team. You know, my first 5K was probably 33 minutes. 33 and a half minutes. I don't know, something like that. And I had to make, I think, like 26 minutes to make the team or something like that. So like I had to put in a lot of work because I was making that team, you know. Like I said, I had muscle, but I was pretty, you know, I didn't have any history of running, no aerobics really. It was a real challenge. And the only way to overcome that is to just keep doing it over and over and over. You want to get better at trading stocks, just do it. You want to get better at running, just do it. Oh my God, I'm going to sound like Nike, but oh man, could I tell you about Nike stock? That stuff is insane. Those guys are literally building people's retirements. They're creating financial futures because of the immense growth that they've had. It's insane. Anyway, Nike stock, very, very, very profitable company. But at the same time, still got to time it. Use technical analysis, and you identify the best buying and selling points. I'm getting a little off topic, but you can make so much money with technical analysis, guys. Stock charts are so valuable. Anyway, I hope you guys are okay with the screeching little bike we've got here. I don't know how much it comes across on the audio, but it's just nothing I can do. Anyway, so I get the ability to finally start trading in financial markets using some jerry-rigged account setup with my mom because I didn't know about joint accounts. I hadn't, you know, read a book that said, hey, this is how you open an account if you're not 18. I didn't know that, man. So I was paying 40% taxes on like everything I did, 20% long-term or something like that because I was paying my mom's tax bracket, which is totally, you know, whatever, dude. I was so thankful to be able to trade. Didn't even matter. Same thing with work, right? I was so thankful to be able to work a job at Subway where they weren't going to limit my hours to those child labor hours. and I could actually work like the full hours necessary to create enough money to finally start trading. That was so valuable to me. It was amazing, you know? And it wasn't like I was gonna whine about the bad pay if I was able to work like twice as much as everyone I knew. And same thing with the stocks, right? I wasn't gonna worry about the bad taxes if I was able to access this insane hill that I could just throw my snowball down. And it was so steep. It had such an insane growth potential behind it. It's like worrying about, you know, a fence on a ski slope, and you're going down at 100 miles an hour, and you have to slightly dodge or slow down just a little bit to avoid that fence or to get around that flag. I don't know, I really like skiing, so that makes sense to me, but the point is you can slow down just a little bit so that in the long term or in the overarching run of the day, you're gonna have just a ridiculous speed. So anyway, I was totally super excited to pay that, because I'll tell you what, those taxes, those are literally your access. You're paying your way into the most powerful economic powerhouse on this planet. It's insane. There's little to nothing as powerful as what you're gonna get from that. And it's so crazy to hear, because that's the exact way that so many people build huge masses of wealth. It's just by finding those assets, investing in those assets, and then when the time comes, you pay the taxes. You know why? Because those taxes are what allow you access. It's like your ticket to the slope. It's like your ticket to the hill to throw your snowball down. And the amazing thing is, there are so many awesome retirement accounts that you can set up that you can like literally pay very minimal tax. You open up a Roth account, Roth IRA, Roth 401k, you pay taxes at the beginning for your admission ticket, and you will never pay taxes on any money you make in that account. Isn't that insane? Like, you pay income when you take it out in retirement, and there are a couple of the caveats, and I talk about those in the book, but like, isn't it insane that you're essentially getting completely tax-free asset to the world's most powerful economic machine? And even with a traditional account, where you do have to pay money every time you make money, like, isn't it insane that somebody will give you access to something? It's like, if I would give you $100 every time you gave me 50, and all I asked in return is that you gave me $10 back, and you only made $40. You only came out with $90 at the end when you started at 50. Like wouldn't that be worth it? I know that would be way worth it for me. It's like the government's, not the government, but the marketplace, right? And the economic machine, the financial asset markets, these marketplaces of buyers and sellers and corporations and economies all converge in this amazing pot of individuals that are literally only there to push your snowball down the hill. They are only there to provide value and make the snow that's going to add to your snowball over time and consistently pay you out every single month, every single year, every single day, because their job, they're in the business of making money. They're in the business of providing you returns, because that's how the capitalist system rewards them, and that's what their purpose is in the system. These companies at a standalone level are made to create profit for the owner, and once they go public, that owner is a shareholder, so you have the same profit-taking potential as the owner of any given huge corporation in the economy. Isn't that insane? Like, if you buy enough shares of, I don't know, Hyatt hotels or Wynn Resorts, Wynn Resorts, if you buy the same amount of shares of Wynn Resorts as the guy who owns Wynn Resorts, you know, the owner, CEO, president, whatever, you literally have essentially the exact same marketplace value potential as the CEO of the company minus his salary, which is nominal, since there are immeasurable tax advantages to being an investor in a company that takes dividends instead of somebody who doesn't take capital gains, who takes an income, and then that income gets taxed, and then there's all these messy Social Security, Medicare. You don't deal with any of that in the market. You're literally elevating yourself to this position of growth that's so immeasurably valuable. It's absolutely insane, because now, you know, instead of being somebody that's going to go out there and always worry about the work they're doing every day. You're somebody who can walk up to a 7-Eleven and say, wow, I own a little bit of this 7-Eleven. Then you can walk inside and get a can of Coke and say, wow, I own a little bit of this Coke. Just a little bit. But then you think about the millions and millions and millions, maybe even billions of people that are doing that very exact same thing every day, every month, every year of their lives. They're literally creating your portfolio. They're pushing your snowball for you. You have this army of people known as consumers in the human race that are going every single day out to work, out to the stop, out to the marketplace to push your snowball down the hill, to grow your portfolio for you by fueling the economic machine, the powerhouse American economy. It's insane. You're able to leverage that and then create an income or a baseline or a security for yourself that's going to allow you to go out and do whatever you want once you make it, because you've proved to the marketplace that you are of value. You've proved to them that what you do is worth it, and that you are someone who deserves to retire, someone who deserves the money to buy that new car, that new house, whatever you want. You've put in the work, and now you deserve whatever item you want, you name it, right? So anyway, back to trading. So I start trading, right? And oh my God, I love it. It's so much fun. So we're trading every day, pre-market gainers, just trading 9 to noon stocks, 20 cents to $20. Just scan for those in the morning. Filter by highest percent change and volume. You want at least, 50,000. Shoot, ouch. Like 50,000 shares, depending on the time period you're in. I talk about it a little more in the book. Honestly, if you don't want to worry about volume, just filter by volume and then look for high percent gainers in that price range, 20 cents to $20. Those are the stocks that are going to go out there and crush it every single day based on technical analysis. Honestly, if you have nothing but a VWAP, you're going to be out there killing it. Oh, ouch. And all you do, it's just crazy. I got so much stuff to tell you guys about that, but that's not what this episode's about. But I will give you a little bit of a sneak peek. So here's the deal, right? Today I made some trades, and I made 10% on 2 trades, and I think 6%, 8.5% on another trade, and I lost 2.5% on 1 trade. So 3 stocks, 2 trades, and one of them, one was a short, one was a long, which just means that you sell the stock, ouch, and then it goes down, you make money, and then, obviously you buy it and it goes up, you make money. So I use that for myself in the market, and I was going out there, and it was just so much fun. So you make trades every day, you trade 9 to noon, and you use those technical patterns that I've been working on for months and months, almost a year at that point. I've been learning all these technical patterns. And when I started trading 9 to noon, that's when I saw those patterns start to emerge every single day in all these stocks, especially like ABCDs. I would see an ABCD every other day, and I would take it consistently and just keep profiting from it. Isn't that cool? Isn't that awesome? You can have these consistent profits just by learning these little patterns, right? With the ABCD, it just goes up and then makes the A. Has this huge initial run-up, and that initial run-up is just this is the foundation for so much, because you have that continuation on the C. And I really wish I could draw it for you guys. I draw it for you on YouTube. It's on my stock lectures. It's in the book. It's everywhere. But you look at that A run-up, and then the B is when it goes down just a little bit. And that's when you have the formation of a B over top of it, so there's 2 little bumps. But then that continuation, the price goes down a little bit from the A high, but it also isn't too far down below that high. So it's maybe half or 3/4 of the height. And then it starts to curve back up towards the high, just very, very slowly, to gently caress the edge of a C. And then when it hits that new high day, or it goes to that level of growth that's going to continue for the C to that high day, that's when you have the price just skyrocket up and make that D. And that D is what literally doubles your portfolio overnight, depending on your risks and how much money you put in a single position, because it's going to double the run-up of the A added on top of the A. So you take however much the bottom of the A was to the top of the A, add that to the top of the A. That's your exact price target for your D follow-through. And then obviously you can modify it based on momentum. Like if it rushes through that really, really quickly, maybe sell half. But if it's slower, then totally sell out at that price target or set a stop loss so that you're at least making 10% on your trade. Because it's all about percentages, right? So the best way to grow, no matter what you're starting with, is to establish percent gains and use those percent gains as constant references to judge how you're doing in the marketplace. Because the deal is, when I was trading 9 to noon, I had, a couple $100 in a position. I might make 10 bucks, 20 bucks, 30 bucks, 40, whatever, right? If I was really good, I could double a position, make a couple $100. You got to understand that the percent change in that is worth so much more, because as your portfolio grows, right? As, instead of $100 positions, now you have $1,000 positions. Now, when you double your money, instead of making a couple $100, you make a couple $1,000. Okay, well, you keep doing that over and over for a little bit of time. Now you start to have, maybe 5-figure positions. I know that sounds tough for a lot of you guys, but look, it just takes a growth. It just takes a mindset shift of, this capital is for investments, and this capital will grow investments, because that is what it's meant to do, and that's what it shall do for me, as it serves me as an investor in the American economy. So anyway, with that said, start to make these percentage gains that are extremely valuable. You're making in a day what it literally takes people an entire year to make with index funds. Sometimes double, sometimes triple, sometimes quadruple. There are stocks that I was trading that summer that went from $1.50 to like $8 in one day. Like that's insane. That's so ridiculous. And the most amazing part is once you learn like VWAP and some of the simple moving averages, exponential moving averages, like with 9 to noon trading, right? It's just an average of the previous closes, the previous prices of the stocks, the candlesticks, right? The candlesticks just show the price of the stock. It's just the average of the price of the stock's candlesticks over time as they grow. Over time. So you look at the average prices, and that's going to create a price level that's going to act as a significant support and resistance level where the price will bounce off it or break through it. You look at it breaking through those levels. You look at it breaking through VWAP. And now, because you've put in the knowledge and you have the education behind what you're doing, I can time that stuff so crazily accurately, because it's like written out in plain sight once you understand and you're not trading blind anymore, right? So when you start out, it's just a chart, and that's really intimidating because it's hard to analyze a chart. But once you add these technical indicators, once you figure out these patterns you can trade, it starts to make so much more sense. It's like learning to read Chinese, except instead of taking years and years and years to learn Chinese, you can literally do it in the span of like literally a month. If you want to like read my book, like that will get you there. You will literally learn the entire language of the stock market. And that's the point with it, right? Is that you can decode the information better than 99% of the entire human race. And when you have that very, very specialized yet easily acquired skill set, you're going to be able to produce such massive economic results in the marketplace because so few people do it. And the most amazing part is there's an abundance of money out there for people to do it with. Like, you could have millions and millions of people trading that stock, trading that single stock that's going to double, triple, quadruple. Any number of people, there's an unlimited number of people that trade that stock. And the more people that trade that stock, the more that it's going to run up, because more people buy it. More buying pressure means that more of the available shares to trade get bought up. And that means the stock's just going to get squeezed higher and higher. And like, people ask, like, Jack, why do you give away all your stock market secrets? Like, literally, it's better for everybody if there's more traders in the marketplace, because more traders in the marketplace means that there are more people trading these technical setups. It means that for each individual person trading, they're going to have the opportunity to create greater results since there are more eyeballs on a stock. And more eyeballs on a stock means that the price goes higher and higher and higher and higher. I know people that are literally paying for their entire college with just a week or two of trading. It's ridiculous. It's insane. I love it. It's just such a powerful thing. So anyway, back to summer trading. Trading every day after I work out, and then I'm doing research at night pretty much just about long-term investing and how to get better at fundamentals and stuff like that, stuff that I've distilled down into the book. And I keep doing it every day. And then a couple of months in, probably 2 months in, so there's a couple of weeks in, and I'm trading this one morning, and it's just 9 to noon, pre-market gainer, standard stuff, everything I'd been doing, doing technical analysis, and I was loving it. It was such an amazing time, and I was creating just amazing results. I loved it. I look at my computer, and I just kind of sit back for a second, and I look at myself, and I kind of realize, like, this is something that I would literally do every single day for the rest of my life. I love it that much. And that's when, my whole life changed, because I realized that if you guys heard my other episode about unique ability and focusing on what you're passionate about and what you're very, very good at, this single ability has just changed the way I look at it, the work I do, and all the efforts I put forth in the marketplace, because like I would literally do that every day. I would trade every day for the rest of my life, because I love it. It's amazing. And it's something that no one can take away from you, because you're providing results directly to the marketplace. And once you start to be able to do that, you just don't stop. It's like creating your own like company in the stock market, and you are your own fund, and you suddenly have the ability, thanks to your education and your persistence and your growth in the market, to outperform major billion-dollar corporations that are funding these huge portfolios, because there's just such an insanely different level of value that is available to 9 to noon traders in this very, very short term versus those long-term swing trading, long-term investing. Those 1 minute candles on the right stocks, once you find the right stocks, those 1 minute candles can literally move faster than a 1 month candle on traditional stocks. And that's just where that crazy power comes from, with that insanely greater volatility in that very, very select niche sector of stocks. There might be 10 a day, and of those 10, 1 of them are a winner. Sometimes none of them are winners, but when you find those winners, when you are able to create that massive growth, it's going to cover all those losses. It's going to cover anything you could want so quickly. And it's such an insane level compared to all other possible investments in the marketplace, because you're just at such an insanely different level of growth and investments than anyone else with these 9 to noon stocks. It's so cool. I love it. So school starts to approach, junior year, and I start to realize, like, I'm not going to be able to keep trading the opening bell during second period every day. So I start learning, and I start getting on my grind. What I started with was researching long-term companies. I started researching companies. I keep doing that. And then I learned, through no luck of mine, about this magical thing called Ethereum and these blockchain technologies. I was huge into computers. Recently built my first computer. I was looking at some computer parts websites, and these guys, they were talking about, like, hey guys, invest in this thing called Ethereum. And I was like, oh, that's kind of like a cool stock or something, I guess. And for those who don't know, Ethereum's currently the second largest cryptocurrency in the world, maybe third, I don't know. The market caps are always different, but yeah, second largest cryptocurrency in the world, with so billions and billions of dollars. It's insanely valuable technology that I personally think is literally going to change the world. That's not the point of this, but blockchain tech's insane, guys. It's ridiculous how crazy valuable that is in the marketplace. So I thought Ethereum was like a stock, I'll be honest, and I was like, oh, cool, stocks. That's nice. Historically, with all the work I'd been doing up to that point, the most I'd seen a stock do was like double in a month. And that was pretty rare, especially with, swing trades, for investments. Usually stocks are slower, they're more conservative. But every once in a while, you have stocks that double. It's just really, really hard to find those, like double in like a month's time, because then they're going to get a whole bunch of press. You're going to get a whole bunch of media attention, and that's really going to get a lot of people to sell, especially if it's like a well-known company and people have a lot of money in it. They're going to want to take profits. They're going to want to get out, which is totally reasonable and understandable. That's why with most investments in the stock market, you're not going to see anything near 9 to noon returns, because 9 to noon returns happen in a period of 10, 20, 30 minutes, maybe 2 hours at most. Sometimes it lasts a whole day. Sometimes it lasts one whole day. Okay? Those are the positions where people don't know about it unless you know about it. And the way to know about it is by trading 9 to noon and using those stock screeners with that price range, 20 cents to $20, and then, minimum 10% daily gain. Maybe 5 if it's a slow day. Then filtering by highest percent gain or highest volume. And you use that to find the positions that no one's talking about, except for the people that are 100% sold on the idea of pumping these stocks and using them as a way to just create surreal marketplace returns consistently, and it works. That's the point with it. It works and it crushes it. So I hear about this thing called Ethereum, and I'm like, yeah, dude, honestly, that's cool, but I'm still trading 9 to noon. I'm getting these awesome returns. I love it. That's a cool little thing you got there, but I'm just gonna kind of peace out on it. I looked it up, and it just kind of looked a little sketch, and it wasn't really like a normal stock where you just buy on a brokerage. You had to go through all these cryptocurrency exchanges, and I was like, dude, what's that? I've never done that before. How do you do that, right? So I didn't really pay much attention to it and just kept trading. But then, a couple of weeks later, I think Ethereum was like $20, maybe it was $30, and I hear this again somewhere. I was browsing the web or something, and I hear more about Ethereum, and I'm like, you know what? I've heard about this place. Maybe I should give it a chance and look it up. And then I start to realize, whoa, this isn't a stock or any other investment I've seen before. This is something radically different. This is a cryptocurrency. And it was interesting because when I was experimenting with 9 to noon trading, I wasn't, just trading stocks. I was also trading, not crypto, but Forex, so international currency exchanges and commodities and derivatives and futures and options and all these other different financial tools and assets, and especially with currencies. I talk about it in the book more for all these, but in currencies, I really wasn't finding very much volatility at all. It would move like literally fractions of a percentage in a day, maybe 1%, maybe 2% in a day. And in 9 to noon stocks that are going up hundreds of percentages, that's just nothing, right? It's just not even a valid comparison. So I never really thought about investing in currencies. It just wasn't worth it. But this currency, the cryptocurrency, apparently, in the week I'd ignored it, went from $30 to $60. And that's when something really amazing happened. And I said, dude, I gotta learn more about this, because this thing just doubled. And that doesn't happen. It doubled in a week. Like that doesn't happen. So I start researching, what in the world are cryptocurrencies? And at the beginning, it was like the stock market all over again. I was learning this huge rush of materials. But thankfully, unlike financial markets, I didn't know a whole lot about any of the background when I started. With cryptocurrencies, I had that background in computers. I built computers. I built computers for friends. I loved the networking and the physical parts of them. So because of that, I decided, not that I decided, but I understood a lot of how cryptocurrencies worked at a fundamental level. I sort of got, how these consensus mechanisms worked, and why these consensus mechanisms had certain algorithms or functions in place that actually enabled the cryptocurrency to work, and how the cryptocurrency worked based off of the decentralized network of computer nodes in the system. And those computer nodes are really, at a basic level, just people that have really big computers, and those computers run these blockchain hashing algorithms, and those hashing algorithms create this decentralized ledger. And it's kind of like when you have a bank that has a ledger. That bank has to keep track of everybody's account balances, right? So it's sort of like that in cryptocurrencies, where the cryptocurrency is like a bank, but it's a decentralized bank. So instead of having a centralized US bank or a centralized, Bank of America, something like Wells Fargo, whatever it is, where they have their central index of who has this much money, and everyone's data is in this big central honeypot. With cryptocurrencies, you have this huge, expansive, ever-growing network of independent, decentralized computers, and those computers run an algorithm that essentially uses proof of work on a computer, at least with most of the current algorithms. And that does is it's kind of like someone mining, right? That's why they call it mining, is it puts a lot of sweat work on the computer, and the computer has to go through a lot of pretty intense calculations. And those calculations, it's just like a really, really big calculator trying to figure out what one random number is in a series of thousands of digits. And then when one of the random computers puts in enough work, computational work, once they put in enough computational work, the computer is finally able to move on to the next block in the blockchain, right? So it plugs in that number, and that number gets proved valid by the overarching decentralized proof of work system that randomly generated it. And because of that, the work of the entire network is put into this new block that's created in the blockchain. And the blockchain is essentially just this big history of transactions, blocks of transactions that are validated by these computers that mine it, right? So instead of having your check go through a bank and then the bank says, okay, I approve this, you have thousands and thousands of these computers that are all trying to find this one random number. This one random number is what allows them to create the next block in the blockchain. And then all of the pending network transactions are put into that block, right? And they find one every 30 seconds, every minute, every 2 minutes. Just depends on the block time. And in exchange for finding that number, these computers are rewarded in cryptocurrency, and that cryptocurrency then pays for the operational costs and capitalist profits from the machine. So you've got thousands and thousands of people that want to send money across Bitcoin, across Ethereum, across cryptocurrency networks, and they all pay fractions of a penny, which are extremely small compared to what you pay, in a traditional banking system, where you're paying like $15 to send a transaction, or $10 or $3, or literally any amount of money just to have the ability to send your money to another individual in the economy. It's really, really ridiculous, just the fees that go into traditional banking systems. And that's why, I talked about 2 reasons earlier that it's difficult for people to get into finance. The other reason, that second reason, is the fundamental barrier to entry into finance created by these centralized banking and asset firms that literally charge people these insane rates to put their transactions into the network, and then validate their trades, create their accounts, maintain their accounts. Like, it doesn't cost anything to maintain that decentralized blockchain ledger value. And that value is the amount of money in your account. You protect it with something called a cryptographic hash, and that's really just a big, really long, string of letters and numbers, and it's kind of like IP addresses when the internet started, right? It's just a bunch of numbers, and that represents you in the system. And you have public private key cryptography, which in very, very simple terms just means that there's a key, there's an address, right? Like, you have an email address, there's an address that people send you money to, and then you have a very, very special address that's kind of like your password. And that password lets you take money that's in your wallet and say to the network, hey, I would like to send money to this other address. Here is my secret key. Here's my secret address to prove that this is mine. And since this is mine, I am going to send this, and here's the fee I want to pay for it. Here's everything I want to do with it, and that's that. So once you pay, that very, very nominal, very, very small transaction fee compared to traditional networks, sometimes it's not even existent. You're literally transferring money in a fraction of the time it would take. It takes, days to clear a check, seconds to clear cryptocurrencies. It costs so much more money to clear a check, literally almost nothing to clear a cryptocurrency payment or transaction. And it's also radically, in most hashing algorithms, radically more transparent. So like cash is very, very hard to trace. Like if I give you $100, that's really, really tough to trace. But if I can all of a sudden send you this cryptocurrency payment, well, now it's recorded on this blockchain, this ledger, this decentralized bank sheet that's going to tell everybody's transactional values and also show the movement of money throughout the system. So it shows where you send money to, who you got money from. It's all very, very transparent, unlike traditional banking systems where these central entities have complete and total control of who gets what information and how that information is released to the press. And then there's also all these financial frauds and schemes and banks that are breaking the law by having, illegal stuff go on. And it still happens with crypto, but with crypto, it's much more transparent. So you know exactly who's sending money to who, and that's readily auditable on a public blockchain that shows every single transaction instead of having to sue a bank and then get access to the bank's records. And then the records are all on paper or in the computers, and there's thousands of them, and you can't really trace them. It's so much more difficult to audit, so those traditional financial institutions, and also more difficult to understand the operating capacity and underlying efficiency of that system versus this amazing blockchain where now you can actually see exactly what's happening in real time. You don't have to wait for a quarterly report to understand how the market's working. It's just this amazing, amazing technology. There's so many books on it, and I can't recommend them enough. I talk about them on YouTube. It's literally like the next internet technology. It's insane. I love it. And it's just John Wooten on YouTube if you're interested in that stuff. So anyway, so I start doing all this research about blockchain and all these new cryptocurrencies. And because of that, I start to realize that, hey, I can trade these things 24 hours a day because they're currencies. And as I look at them, like I said, Ethereum doubled. That was just a little peek at the insane volatility that was in the marketplace at the time, right? There were things that were literally going up hundreds of % every single day, just like the stock market, right? Those were the exact same massive growth patterns and technical setups that I was seeing in the stock market every day. I was seeing those in cryptocurrency markets. It was awesome because all of a sudden, all of the work, all of the knowledge, all the technical analysis I had done in the stock market was transferable to this new cryptocurrency market that I could actually trade during school and after school, before school, all over the place, man. It was awesome. I loved it. And that really fueled my passion for trading, because I got to this amazing point in what I was doing where I was able to continue trading even though I couldn't trade 9 to noon. I used the same strategies and principles and techniques, and those strategies, those principles, those techniques, took me to this whole new level of capital performance. And even though it was still swing trading, it was swing trading in an extremely volatile and capital heavy marketplace that was going out there and crushing it. They were doing insanely well. And that growth came only because I'd put in the effort earlier to invest in myself and my education. And that education was paying huge dividends. I was making, upwards of 90% a month, which is unheard of in standard capital markets. And even in cryptocurrency markets, I was doubling average returns. And the only reason I was doing that is because I was putting in the time and the effort to actually make the trades, research the investments, and use that technical analysis. I know ABCD setups were ridiculously great, and yes, you know, it was an insanely good time to get in the market. Bitcoin was $2,000 when I started, and you know, as you guys know, it went to like 20. It's it's really crazy. I'm sorry, I'm really thirsty, guys. Sorry. So yes, it was good timing, but I was able to amplify and put my results on steroids because of the technical analysis I was doing every single day. Because in the stock market, right, you can always have those long-term investments in asset funds, right? So those conservative long-term returns. But when you get into active 9 to noon trading, you're going to outperform. Well, 9 to noon trading with stocks translated to swing trading cryptocurrencies. And, you know, Bitcoin, Ethereum, they would go from $60 to $600 to $1,000, $1,200 for Ethereum. It was crazy. It was absolutely berserk. But at the same time, the smaller, hundreds, thousands of these smaller currencies, they were just like the smaller stocks I was trading in the stock market. And those were the stocks that went from half of a penny to 70 cents. Not the stock, the cryptocurrencies. Those were the cryptocurrencies that went from like 1 cent to 34 cents. Those were the cryptocurrencies that just crushed it. Thousands and thousands of percent returns. And it was this opportunity in the marketplace that has been unparalleled in all of history and in current history. It was one of the fastest financial growth periods in any asset market I've seen in my life, and I think will exist in this in ever. It was like all of the 1990s dot-com bubble condensed into like a 5-month period of trading. It was ridiculous. It was absolutely insane. And the most insane part was every single stock that was just killing it, was absolutely destroying the market returns. Those were the stocks you could identify with technical analysis and technical setups and technical indicators. And all I would do every single day, log into Bittrex, log into Binance, and log into, you know, Bitfinex, CoinMarketCap, all those platforms. And I would just look at the technicals. I would look at those support resistance levels. Everything I talk about in part 2 of 9 to noon. And all I would do is spend an hour, 2, 3, maybe 4 looking at them, figuring out what the best investment was, researching the fundamentals because they were swing trades. And like I talk about in part 1, you got to understand your swing trades so that the company doesn't go bankrupt. And once I did that, the results I were getting, I mean, let me slow down for just a second because I'm really tired. We're almost home, which is great. There was something that happened at the time, and this might be the last story I can. Whoa, man. This might be the last story I can tell you because I'm almost home. But I remember there was this company that came up. They were called Laser Online, and Laser Online was what's called a Ponzi scheme. And in a Ponzi scheme, a pyramid scheme, however you call it, you have these insane promises of extremely large returns. Like they were promising, I think it was, I think it was about a 1% to 3% daily return. So every single day, you just gave them your money, and they would give you, I think it's like a 1 to 3% daily return depending on how much you invested. And a 3% daily return, that is a guaranteed return at that. That's literally an entire year of U.S. Treasuries, which is the only real guaranteed investment you can make besides CDs, is that 3%. They get like 3% a year. So 3% a day is pretty much a guaranteed financial scam, pyramid scheme, whatever, right? Okay, so this company comes online, and they're using cryptocurrencies to fund a Ponzi scheme. And something really, really interesting happened. Because I was making a lot of money at the time, just off my position. So I decided, hey, you know what? I have investments to diversify. Because as you guys know, please don't do this. Please don't do this, but just hear me out here, okay? You know, I put in like a 5% position, which was like $600 in, and 5% is a pretty solid diversification standpoint. I talk about that in chapter 35, but that was just like, you know what? I would be okay losing this money, and I also know there's a high potential for return here. So I put that position into this Ponzi scheme because I was early in the Ponzi scheme. And if you get in a Ponzi scheme early, I hate to say it, but you can definitely make money as people fall for it, which sucks. It's really not a great thing to do. I would not recommend it, especially the people that promoted it, people that were like out there on the internet saying, hey, join this Ponzi scheme. They, you know, at least it was a little bit different. There was Laser Online, and there was this other one, and oh God, what was the other one called? It was called BitConnect. Yeah, BitConnect. BitConnect was also another cryptocurrency Ponzi scheme that came up. It came up because these financial markets were literally doubling in a month. It was like the most insanely fast period of economic growth in any financial industry I've ever seen or will ever see, without a doubt. You know, it was a record-breaking, institution-changing. Those 6 months in stocks were the equivalent of the past 60 years of the stock market. It was ridiculous. It was insane. It was absolutely insane. Anyway, because of that, there were a lot of people that were coming in, and they maybe didn't know the technicals. They didn't have the education. They didn't have the timing, which sucked for them because a lot of people lost a lot of money. I lost a lot of money. But anyway, I put in that position. And in that Ponzi scheme, those are supposed to be pretty much the best returns ever in the entire world because, like I said, it is a scam. But they were, my hypothesis, they were at about $30 million invested when I put in my investment. And everyone that I knew in the space that I was talking to and I was masterminding with, which isn't necessary for financial success. But in a marketplace like that, I was following a lot of online people and trying to grow with them and learn from them and increase my knowledge in the cryptocurrency space. What they were all pretty much saying, which is kind of what I thought is these guys weren't going to exit until they made $100 million, or they had $100 million invested in their Ponzi scheme. So that was pretty much the general consensus, and it made sense given where they were in the marketplace. So I took that for face value. I said, all right, well, I guess I'll leave it in here until they make about $85 million. I left it in there. They made about $85 million. That took about a month for them to make that extra $50 million. So they're making, whatever, right? Just by getting people, it was really bad. It was a ridiculous scam. But it was just such an insane. I mean, the emotions behind it are so crazy because you literally have people. It was ridiculous. They were doubling their portfolio in a week. That's like 4, 6, 8 years of the stock market. It was insane. Anyway, I take my money out after that month of the Ponzi scheme, and essentially, I think it doubled. So I put in $600, and I got out. And I think it was about $1,000, maybe $1,200, in profits. At the same time, I was trading my normal portfolio because, like I said, those smaller cryptocurrencies, those are the ones that are going to make you a lot of money, just like 9 to noon stocks. And in my normal portfolio, not only did in that same time period had positions in stocks like Stellar Lumens and Verge and XP, these little smaller cryptocurrencies that just skyrocketed. Oh, whoops. And stuff like Ripple, it was coming up. No one knew about it. And these other very, very small currencies essentially tripled my rest of my portfolio. So I was actually beating a Ponzi scheme in terms of returns because of the absolutely berserk marketplace volatility, and exclusively because I put the time in to learn the technical setups and the indicators and the patterns and the charting and the mentality and the psychology, just like you when you're sitting on this podcast, when you're reading my book. That's exactly what I went through to have those returns, to destroy marketplace predictions and crush any influence of others saying that what I was doing wasn't real and that it wasn't valid and that I couldn't trade for a living. It was awful. And now I'm past it. It's amazing. Anyway, I got home. Fortunately, I'm not going to be able to have podcasts like this too often. Today, my bike broke at Georgia Tech, so the chain snapped, and I was dumb and I didn't bring a hex wrench, and I fixed it, but then it actually snapped again after I went to the gym. So after the second snap, it got lodged in the bike train where the chain goes under some plastic part, and I can't get the plastic part out without a hex wrench, and I was silly and didn't bring one. So that's why we walked home today. It's kind of tough. It's pretty freaking hot, but we're here now. Hope you guys enjoyed this episode of Stock Market Secrets. Yeah, cryptocurrencies were pretty crazy, but you got to understand the baselines and the fundamentals and technical analysis behind it. And once you guys understand that, like, this technical analysis is a skill that will literally pay you dividends for the rest of your life if you apply it. And you don't even need that much time to apply it. It's like trading 9 to noon. And 9 to noon is literally the most work you can possibly do. The most work I recommend people do for their portfolios. And I break down the exact 9 to noon workday in chapter 1 of my book, 9 to Noon, the secret workday of uber wealthy Americans. But the point with it is that this skill set might take you a month to get an understanding of, to read the book in a month, which is totally doable. And when you apply it for a couple months, you're going to create a skill set where you can work at minimum 5 minutes a year and create real savings and retirements. At maximum, 3 hours a day. 3 hours a day, and you're going to have complete access to that financial growth that is possible every single day in the market consistently, thanks to pre-market gainers and market timing and positioning. And it's so immensely powerful. I mean, and if you like to do it, and if you're sort of like me and it's just so much fun for you, and you find that the 9 to noon workday is literally just one of the most fun things you can do, which it's really, really fun, and you click with it, it's such a great way to make, it's just such an amazing thing. And 3 hours a day, average workday, 9 to 5, that's 8 hours. You're working less than half of most people, weekdays only, and it's just a tremendous high income skill to learn and to master and apply. And you don't have to have $1 bajillion to start. I worked at Subway for a year to get the money to start. I didn't even use all the money I made at Subway. I started with $1,000, Like, just work like a month at a minimum wage job, buy a book, and you're there. Like, isn't that insane? Isn't that crazy? I think it is. There's no elevator on this floor. Oh, yes, there is. Hooray. Whew. All right. Thanks, guys. Ooh, go out there. Go into the marketplace. Ooh, produce results and absolutely crush it. Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses it took me years to uncover, completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% per trade daily.